A single document just ignited a financial war that will define this decade. And what China is about to do in response will change the global economy forever. When the U.S. administration signed its new directive to build a national Bitcoin stockpile, most observers called it a win for digital finance. Markets rallied. The price surged. The narrative was all about American innovation, but that was a dangerous misunderstanding. This move was never about fostering new technology. It was a declaration of economic warfare. A deliberate effort to turn a decentralized network into a tool for national strategy. And in Beijing, the message was received loud and clear. They recognized this for what it was, a direct challenge to their financial sovereignty. The highest levels of power convened not to talk about semiconductors or territorial disputes, but to formulate a counter-strategy for Bitcoin, because they know this race will decide who controls the future of money itself. This is not speculation. This is the new reality. And today, we will reveal the three-part counterstrike China is already executing. This is a Cold War for a digital asset. First, let's break down why Beijing views this American policy as an existential threat. For decades, the US dollar has been the world's indispensable currency. It's the lifeblood of international trade and the foundation of global reserves. This position grants the United States what economists call exorbitant privilege, the power to print the currency the world must use and to cut off nations from the financial system through sanctions. Think of Russia, Iran, Venezuela. Each time this happens, other countries flinch. They see their own vulnerability. For China, a rising superpower, this dependency is a strategic chokehold. They have tried for years to promote their own currency, the Yuan, as a rival. But progress has been slow. Why? Because global trust in China's opaque state-controlled financial system is limited. The yuan can be manipulated, its value set by decree. The world remains skeptical. So what is the one asset that is neutral, limited in supply, and beyond any single government's control? Bitcoin. For China, it represented a potential escape hatch from the dollar's dominance. A stateless base layer for a new financial architecture where America couldn't call the shots. But Washington's recent move changes the game entirely. If the United States successfully accumulates a massive portion of the Bitcoin supply, it risks turning this neutral tool into another instrument of American power. In Beijing's view, the escape hatch is being welded shut by the very rival they sought to escape. This is why they had to act. Not in months, but in days. This is an arms race for digital gold, and the starting pistol has been fired. So, what is their opening gambit? Part 1 of their response: the Great Mining Mobilization. You might remember that China officially banned cryptocurrency mining several years ago. The public reason was energy concerns. The real reason was control. They couldn't effectively monitor and commandeer the mining done by private citizens. But the ban was never absolute. State-linked operations in regions like Xinjiang and Inner Mongolia quietly continued. Now, following the US move, those covert operations are scaling up dramatically. Provincial governments have received new, unpublicized directives. Vast state-owned power plants in remote areas are being instructed to divert excess electricity energy that would otherwise be wasted to dedicated, government-run Bitcoin mining facilities. China generates more power than any nation on Earth. Imagine that industrial might, now focused on a single digital task. They are not seeking to make a public announcement. They are seeking to acquire Bitcoin on an industrial scale, using their massive energy advantage to secure a dominant share of the network's daily issuance. Intelligence analysts suggest their goal is to command over a quarter of the global mining network within 2 years. At that rate, they could be adding hundreds of new Bitcoin to their reserves every single week, all while the public narrative still claims they are out of the game. This is a shadow acquisition of staggering proportions. But mining is only one stream. Their second move is even more direct. Part 2. The silent treasury purchase. China holds trillions in foreign reserves, a large portion of which are US dollars and treasury bonds, the very assets they want to reduce reliance on. They have been slowly diversifying into gold for years. Now, they are adding a new digital asset to their strategic reserves. The People's Bank of China cannot officially buy Bitcoin. That would be a political earthquake. But state-controlled investment funds and corporate proxies absolutely can, through over-the-counter desks in financial hubs like Singapore and Zurich. These entities are acquiring Bitcoin in massive, discrete blocks. These purchases are designed not to move the public markets, but to steadily fill a national vault. We are talking about tens of thousands of Bitcoin acquired since the start of this year alone, with a budget that could run into the tens of billions. When you combine this stealth buying with their mining output, China is on a path to amass a holding that could rival any nation on Earth within 3 years. Nation-states are now the ultimate Bitcoin whales. But accumulating the asset is only half the battle. The real endgame is creating a new system to use it. This brings us to part 3 of their strategy, the digital yuan gambit. China has spent years developing its central bank digital currency. The problem? International adoption was near zero. No other country wanted to use a digital currency that gave the Chinese Communist Party total visibility and control over every transaction. It was seen as surveillance money. The US move provided a brilliant solution. Beijing is now subtly repositioning the digital yuan. The new, unstated promise. It will be partially backed by the nation's Bitcoin reserves. While not fully redeemable, the suggestion of a Bitcoin-backed digital currency makes it dramatically more attractive on the world stage than a pure fiat instrument. They can now offer trading partners a choice: use the volatile, unbacked dollar, or use a digital currency with a hard asset behind it. This is a masterstroke in the currency war. They are targeting nations already wary of American financial power. Russia, Sicko, Ruby Kiss. Only Ruby Kiss has the luxurious texture that glides on was late star. A Clyde AZO and leaves a rich, long-lasting. My sissy long-lasting color. My sissy Kaling Kamid. My sissy Kamelik. My sissy Khmer. My sissy Khmeri. I commit. We see. It is it. We are lie to see. We say 6. Commit kayet. We say it's it all. We say cap. I so I can sibile it's it. Besets it to me. It's a sick you kitai. Let's it stick to the by to toast it. Get it. It's to gossip. But it bad beak to the good. Iran. Parts of Africa and Southeast Asia. Every trade settled in this newly conceived digital yuan is a trade moving away from the dollar system. This is how you dismantle a monopoly, not with a single blow, but with 1,000 cuts over a decade. And China is patient. They are playing a long game, while political cycles in the West foster short-term thinking. So, where does this lead? The timeline is becoming clear. This year, 2025, is the opening phase, covert mining and quiet purchases. By 2026, we will see an acceleration. Other energy-rich nations, like Russia and Iran, will formalize Bitcoin payment schemes for their oil and gas, creating the first cracks in the petrodollar system. By 2027, we will reach a crisis point. The digital yuan's Bitcoin backing will be more explicitly hinted at, driving adoption. The collective bloc of BRICS nations will likely announce a shared Bitcoin-backed reserve pool. This creates a parallel financial system, a genuine alternative for nearly half the world's population. The dollar's share of global reserves will plummet below 50%, a psychological threshold unseen in modern history. The world will become financially multipolar. Who wins in this new world? Not necessarily America or China, but the asset they are both fighting over. Early Bitcoin adopters who held on. Nations that diversified their reserves. Who loses? Those holding only declining fiat currencies and those who sold their Bitcoin too early, missing the greatest wealth transfer of our lifetimes. So, what should you do with this information? This is not just a story about geopolitics. It's a signal for your own financial strategy. When the world's two largest economies are competing for a fixed supply asset, the fundamentals of price are rewritten. The most critical step you can take is to ensure self-custody. Do not leave your assets on exchanges that can be pressured or frozen by governments. Move them to your own secure hardware wallet. You must be the sole controller of your keys. This is the only way to ensure that no matter which nation wins this economic war, your share of the prize is protected. The currency war is no longer a theory. It is here. The first shot was fired in Washington. The counteroffensive is being mobilized in Beijing, and the battlefield is the Bitcoin network. The next 3 years will reshape the global order. If this perspective clarified the real stakes behind the headlines, then you understand what's at play. To follow every development in this financial conflict, make sure to subscribe to Winds of Thought. We track the signals that others miss. And if this video provided value, please support the channel by hitting the like button. It truly helps us grow. Thank you for watching.